Ladies and gentlemen, good day and welcome to the Q3 and 9-month FY2024 conference call of Bank of Maharashtra Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. We have with us from the management, Shri A.S. Rajiv, Managing Director and Chief Executive Officer, Shri Ashish Pandey, Executive Director, and Shri Rohit Rishi, Executive Director, and all General Managers of the bank. I now hand the conference over to Shri A.S. Rajiv. Thank you, and over to you, sir.
Yes. Thank you so much. First of all, welcoming all of you to this conference call. Today, our results is approved by the Board of Directors. We would like to brief of the financial results. This quarter, bank was able to reach different milestones in different areas like operating profit, closing operating profit of 2,000 crore per quarter, net profit more than 1,000 crore per quarter, ROA above 1.50, that is 1.55, ROE around 25%, cost income ratio lowest of 36%, etc. And in case of operating margin, it is improved to 34.5%, where the net profit margin improved to 18%. This net profit of the current quarter is up by 33.61% to 1,036 crore as against 775 crore corresponding last quarter. The same is up by 12.58% on sequential basis, quarter to quarter. Operating profit has shown a growth of 27.32 on year-on-year basis to 2,012 crore as against 1,580 crore in Q3 FY23. The same has improved on quarter-to-quarter basis by 5%. Net interest income grew by 25% on year-on-year basis to rupees 2,466 crore as against 1,980 crore for Q3 FY23. The same is on quarter-to-quarter basis up by 1.39%. Next, revenues, net interest income plus other income for Q3 FY24 improved to 20% from 2,620 crore to 3,146 crore as of Q3 FY24. The same is up by 1.5% on quarter-to-quarter basis. Cost to income ratio improved to 36.04% as against 39.69% corresponding last quarter. The same was 38.04% quarter ended 39.23. Return to 1.55% as against 1.3% Q2 FY23 and 1.374% for Q2 FY24. Return of equity also improved to 24.51% as against 24.4% for Q3 FY23 and 23.25% for Q2 FY24. The total business grew by 18.89% to 4,34,000 crore. Total deposits grew by 18% to 2,46,000 crore. Gross advances increased by 20% to 1,88,670 crore. CD ratio stands at 76.78%. Gross NPA declined to 2.04% and net NPA reduced to 0.22%. Provision coverage ratio improved to 98.4%. CRAR stood at 16.85%, of which Tier 1 is 12.92%. If we add the 3-quarter profitability, the CRAR stood at above 19%. For 9 months ended, net profit up by 61% to 2,837 crore as against 1,762 crore for 9 months ended 31/12/2022. Operating profit has shown a growth of 37% to 5,000 crore for 9 months as against 4,244 crore for 9 months 31/12/2022. NII growth was 31% year-on-year basis for 9 months to 7,237 crores from 5,554 crore. Fee-based income increased by 13% on year-on-year basis to 1,048 crore for 9 months ended 31/12/2023. Cost-to-income ratio for 9 months ended is 37% as against 39% corresponding 9 months period. ROA for 9 months is 1.42 as against 1.02 for 9 months. ROE improved to 22.7% as against 18.5% for 9 months. In case of advances, net advances grown by 21%, where from RAM sector, retail is grown by 22%, MSME advances grown by 29%, and agriculture grown by 35%. For the current quarter, we have reduced our corporate exposure, that is, it was earlier 41.5%, reduced to 39%, and thereby increased the RAM sector that much quantum. During the period ended 31st December, the bank has raised equity capital for the 9 months, 1,000 crore is reduced, 1,000 crore is raised, and Tier 2 capital of 774 crores. Earlier, whatever the provisions held by the bank is continued to hold the provisions of 1,200 crore. And for the current quarter, as regards provisioning, additional contingent provision of around 300 to 350 crore bank is made, consequent upon the prevalent agriculture drought and other issues concerned, and revised guidelines of investments is applicable from next year. So for that purpose also, we have contingent provision of around 1,000 crore in case of valuation if it is affects. So these are the main areas which are the plans which we wanted to share with you. So I think that now we can take up question answer session.
Yes.
Then whatever the queries is there, we are ready to reply that.
Already we have uploaded
We have already uploaded our presentation. Thank you so much.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Suraj Das from Sundaram Mutual Fund. Please go ahead.
Am I audible?
Yes.
Yeah. Hello, sir. Thanks for the opportunity and congratulations on a good set of numbers. Just two questions, sir. One, on the staff cost. I mean, QOQ, your staff cost has reduced. However, if I see the wage provision, I think that has increased. Earlier, you were providing at something like 55 crores per quarter. This quarter, I think you have provided something like 100 crores. And also, if I see the GSEC, I mean, that is broadly stable on a QOQ basis. So just wanted to check, I mean, what has led to this decline in staff cost?
So staff cost as of now, as per IBA guidelines, as of now, it is expecting that around 17% increase in the staff cost for a latest bipartite settlement. As against 17%, I think we have already provided 20 to 22% provision is already made. In addition to regular provisioning, we have, for the current quarter, we have made around 150 crore provision we have already made. So that is why we have now, last quarter it was not stabilized whether what was the rate of increase expected. So that was finalized at 17%. So we have not provided that instead of 75 crores, we have made only 50 crore for the current quarter. That is why the small amount of difference has happened.
Okay, but I think, sir, last quarter you provided 55 crore on the wage settlement bill. This quarter you have provided something like 100 crores. So there is increase, but overall staff cost has decreased. So that was my question.
I will tell you that if you remember that earlier we provided staff cost at the rate of 15%, and for 2 quarters we have made additional provision of 145 crore. In addition to that, 15%. Now, since we settled at 17%, so accordingly we have made provision out of 145, some amount. When we made the 70%, we have taken from the previous quarter. So now the over and above 13%, the amount is roughly 100 crore. Additional amount is there. That is why that you see in Q3 staff cost has come down.
Oh, okay, understood, clear. And the next question and the last question, there is increase in the SMA1 book. I think you have mentioned excluding one account, the book behavior is normal. So just wanted to inquire about that one account. I mean, what has happened there? Is it your sole account or what is the reading there? If you can give some idea which sector this account pertains to.
Sir, that was a government account. It has already been recovered. It has come out of SMA1 now. So as of now, our SMA1 and 2% is 0.15%. Today it has come out.
Okay. And is this your sole account, sir?
No, it's not a sold account.
Okay. Thanks.
Thank you. The next question is from the line of Rohan Mandora from Equirus Securities. Please go ahead.
Yeah, good afternoon, sir. Thanks for the opportunity. So just taking forward from that SMA1 question, in one of the slides, the number of accounts in SMA1 has gone up from around 70 odd to 700 odd. So just want to understand, while these are granular accounts, but which sectors are these SMA1 coming from?
What you are telling again? Can you repeat again?
Sir, if you look at the presentation, in one of the slides, the number of accounts that are there in SMA1, that thing has gone up from 70 odd accounts to 700 plus accounts.
That we have given the amount. Amount is percentage. Earlier that was 736. It was the amount, not the number.
Achha, 736 is amount. Okay. So that was one account which has got recovered, and that's where it's a decline. Okay.
Yes. Yeah.
Sure.
So out of that 736 amount, one account was there, around 560 crore, one account, government guaranteed account was there. So because of the change in the government, there was some delay was there. So now it is clear, and now it is not under SMA1.
Sure, sir, sure. And sir, second was that the increase in yield on investments is largely because of the quarterly averages, because the investment book declined towards the fag end of the quarter. Would that understanding be right? And that's also the reason for increase in NIMs for the quarter?
Yeah, if you see that some of the investments which were carrying low yield, either are matured or we sold out. So it has improved the yield, and that for last 9 months we have added the high yielding securities. So overall it has impact in increasing the yield on investment. That's why it has come up to 6.53 for the quarter. And for 9 months, it is 6.40.
Sure. Just to reconfirm, the calculation of yield on investment is on a quarterly average or on a daily average?
It is on fortnightly average.
Fortnightly average, okay. And sir, if we look at the last 12 months, the AAA rated corporate accounts, that count has almost halved. So which sectors are we exiting these clients from, and what were the reasons for these exits?
Yeah, actually it is not, it is, also know the competition which is there in the market.
Right.
So actually, we are very clear in the bank, which pocket we have to, so that we maximize our returns and be safe as well. So that is why if you see the entire portfolio from AAA to AA, A and BBB as well. So if you will see that the very cautiously and very prudently and thoughtfulness it is being invested. So what happens now, because since the deposit rate has also gone up, so if you are carrying with the same very competitive terms, then certainly it will hit. So it was a very cautious decision to come out. So it is not an exit, I would say, but it is an exit on the commercial terms.
Sure. And so lastly, if you can just talk about the new customer acquisition trends in the liability side, like especially on the CASA, what is the new customer acquisition run rate? Because in the last 3 quarters, that number on the absolute basis has been broadly flattish in terms of balances.
See, related to the CASA, we will give you 3 points, which are the basic. The first is certainly you will be knowing that around 200 branches we have opened. So we keep our target with all the, last 2 months before opening a branch, we keep a target of 10 to 15 crore branch opening business right from the day one. That is the first point. Second is the salary account, which we are really targeting very high on a 1.5 year. So I think that is the second point. Now, third thing is that like CNA and SNA accounts or the corporations. So that also with the help of the software integrations, because today everybody wants ease of doing business. So we integrate, we have a specific solutions for various corporates. Not only I would say the government corporation, but even in the corporates. So we give so that their software is integrated. They need not do anything manually. And the collections or the MIS and everything is given to them. So actually these are the 3-4 points which is giving the accretion in the customer base. So we have run the campaigns as well, almost for the 9 months on addition of the KIF. The KIF means a new customer coming into the bank's fold. So it has nicely yielded results. That is why you see the customer base has also increased and the CASA, I would also say, has increased.
Sure, sir. Thanks.
Thank you. We have the next question from the line of Rakesh Kumar from B&K Securities. Please go ahead.
Yeah, hi, sir. Thank you. Sir, in the opening remark, you mentioned that, the provisions that we have of 1,200 crore, some portion of it, you are holding it to use for this new guideline on the investment valuation classification which came this year and applicable from the April. So can you, are you anticipating, some provisioning requirement for this investment part because of the new guideline, RBI guideline?
Yeah. That we have made 100 crore provision in respect of the provision on the standard investment. You know that the new RBI guidelines on investment has come and it is going to be applicable 1st April 2024. And some of the issues which are constitutional issues and where that we have sought the clarification of RBI. One of the issues that fair valuation of the recapitalization bond which we got from the government. As per that, it has to be fair valued from the date of allotment. So pending that clarification, we have made prudently we may have made the 100 crore provision, and once we get the clarification, accordingly we will treat this provision whether to write back or whether to use it.
So is this provision final or complete amount, or going ahead we would require to make additional provision for the same reason, or this 100 crore number what we have done is kind of a complete number?
It is an estimated provision. We cannot say it is a complete provision, but looking to the investment guidelines, we have made the provision.
Okay. And so recapitalization bond which are sitting in the bank's PSU bank book, so this provision is specifically for that, correct, no, sir?
Yes, sir. Yes, sir.
Okay, so what is the calculation? If you can slightly elaborate, we are not able to understand. So what is the calculation that,
As per RBI guidelines, that recapitalization has to be fair valued at the date of allotment. So suppose the government has allotted 100 rupees and at the time fair market price of such type of bond is 97, 98 rupees. So then 2 rupees you have to fair value, and accordingly that value there will be MTM depreciation. Okay, sir. So in this regard, we have sought clarification of the RBI because it is under STM securities. So once we get the clarification, and there are some other issues, ad hoc basis we have made 100 crore provision.
And there is no other provision that is required for the similar guideline.
No, they have given the classification of investment where they have added a new category FTPL. So that we are assessing that overall the security where it will go because you have to do reclassification. But based on that, roughly we have made 100 crore provision. That is
Understood, sir. Thanks. Thanks so much, sir. Thank you, sir.
Thank you. The next question is from the line of Rakshak Jain from Kotak Securities. Please go ahead.
Sir, you are not audible. Can you speak loudly? No, still not audible.
Mr. Rakshak Jain, can you hear us?
We can go to the next.
Yes, we will proceed to the next question, which will be from the line of Jay Mundra from ICICI Securities. Please go ahead.
Yeah, hi sir, good evening and thanks for the opportunity. Sir, I have a few questions and clarification. So first on this wage provisions, right? So what you said is that the bank was providing at higher rates than 15%, and now right now you are providing at 17%, but over and above you have 100 crores of extra provision. Is that understanding right?
Yes.
Okay. So, sir, when you were providing at the beginning of the quarter, did you say that you were providing at 22%? Assuming 22% kind of a hike?
At that time, that we were not knowing what would be the hike. So on that estimated return, we provided. So 15% we are expecting wage revision, and over and above 145 crore we provided because there was no certainty whether it will be 15% or more. Now that it is clear that wage revision would be settled around 17%. That's why we are telling 70% we have provided. Overall, if you see the take into account additional project, it is 22%.
Still, we are keeping 20-22% higher provision. And if it is finalized at 17 to 18%, we will take it, and the remaining we will write back.
Right, sure. So, sir, when we say 17% wage hike, does it also mean that you are providing as per 17%, but have you also provided adequately on the pension provisions, or this is only for the non-pension part of the wage bill?
No, this is actually total load actually. So, amount we have already provided, including pension. Including pension, if any kind of arrears, it is already provided.
Right. But sir, the load for pension can be different, right? From 17. 17 is the median number. And
so 17, even if 20 comes also, we don't have any issue because we kept it 22%.
Right. So this will take care of your pension provisions also, the entire retirement liability which will go up because of this hike.
Yes, entire pension provision because of arrears, if any, other retirement benefits like gratuity or leave encashment, all this we have considered.
Right. And have you taken actuarial broad park numbers also, or this is on ad hoc basis?
Every quarter we are taking actuarial valuation, and based upon the actuarial valuation only making the provision, not on estimated basis. It is based on actuarial valuation.
Sure. And sir, out of your total staff, how many would be on, let us say, old pension and new pension? I mean, people who had joined before, I think 2003 or something.
6,000 is the staff which are eligible for the old pension.
Okay, so 6,000 people are eligible for old pension, right?
6,000 will?
I think 3,800 is the correct figure who are eligible for the old pension.
Okay, and out of total staff, sir, if you could roughly know.
13,400.
Okay, so your proportion of old staff is actually relatively low, much lower than industry. Is that understanding right, sir? I mean, 33% kind of a number.
But some impact will come for pensioners also, no? Already existing pensioners, around the 13 to 14,000 pensioners are there. There also some growth will come, not corresponding to the existing employees.
Right. But this 311 crore, which is the cumulative provisions that we have, this will take care of all this retirement liabilities, right? Is that understanding right?
Yes. It will take care, and we expect that some amount will come back as right back.
Right. Understood. So that is clear. The second thing is, sir, on this investment book and what you mentioned, that 100 crores provisioning that we are carrying on contingent kind of a basis. On this zero coupon bond, I thought that, during divergence, right, last year when we had made this instrument as a part of our capital, the discounted value was already, we had knocked down our CET1 by that amount, right? So we would have taken that amount into P&L. So why again the provision?
We have not received any zero coupon bond. So whatever the recapitalization bond we received from government, it is carrying coupon.
Okay.
So in our case, it is not applicable.
Right. Understood. So that is a different instrument for you. Okay. And sir, then in this quarter also, we see that out of total loan loss provisions of 977 or 943 crores, we still have 250 crores of standard assets provisioning. What is that, and what is the thought process behind creating this standard assets provisioning or restructured provision? I mean, what is the PCR that we have on restructured, and could this be a recurring thing because we still have PCS standard restructured loans?
So restructured provision is already 400 to 450 crore restructured provision is already in our books. And in addition to that, 200 crore additional provision we have kept for agriculture loans. If anything, as a contingent agriculture, drought and other areas, if it happens, and if everything is okay, we can write back the provision. Otherwise, we have kept as a cushion for agriculture loans.
Okay, sorry sir, so your restructured standard advance is 2,780. How much is the restructured provisions that we have, standard assets restructured provisions?
It is roughly 450 crore. And if you see the where we can expect slippage, that is MSME. The figure is roughly 387 crore. 378 crore. So what we are expecting maybe 5% slip. So 15 to 20 crore means slip. Against that, the balance sheet have more than adequate cushion since we are holding restructuring provision of 450 crore plus.
Right. So sir, this 450 crores, this provision on a loan book of let's say 2,750, this is roughly 20%, right? So 16%. How high can it go? I mean, over the next 2, 3, 4 quarters, would you aspire for a 40%, 50% kind of a provisioning, or 15% is where you think you are decently provided?
Going forward, we will see the trend. Actually, it is sufficient provision, what we feel like. But if we see the trend accordingly, we can make the provision.
Right.
Initially, we made 10% provision when the restructuring was roughly 4,000 plus crore. And we did not reverse even though that restructuring quantum has come down.
So my only conclusion is that we have a net NPA at 22 basis points and we have a credit cost which is 120 basis points. Right? So I don't know. I mean, this looks very, very weird that, last quarter we had 23 basis point net NPA and this quarter we have 120 basis point credit cost. So,
please complete, sir.
Yeah, so what I'm saying, sir, what is the outer limit? So part of this is, of course, you are maintaining PCR and, whatever is slipping, you are providing as much as 85-90%. But on the restructuring, what would be your comfortable provisioning level? Right now we are at, let's say, 15-16%.
See that we are actually at the lowest level of net NPA now. Going forward, we don't find that we'll improve the same. The challenge is to maintain that level from 0.20 to 0.25. So, not much provision will be required, subject to we are controlling our slippages also. And the standard positions we are keeping as a cushion if something happens, especially in agriculture sector. Sir told you about that. So, accordingly, we are going.
Okay, so the total contingent provisions that we have is 1,200 crores COVID provisions plus 450 crores of restructured standard assets provisioning. Is that right? I mean, or this is a part of that only?
It is right.
No, so the total provision is 1,200 plus 450, right? Or
yes, yes.
So 1,650 is the total standard assets provisioning that we have.
And if you see that we are talking about credit cost, if you see, as per IRN, if we are making provisions, we require only the credit cost would be below 0.5. Since to maintain a net NPA below 1%, 0.22, whatever slippage, 100% you have to provide. So that's why the credit cost is. This is not because of that as per IRN now we require higher provisioning.
Right. No, that is clear, sir. That IRAC you need not provide too much, but still that is still coming. Okay, and last question, sir. Why are we, I mean, the tax rate which we pay is very, very minuscule this quarter as well as last quarter. So any details there?
Yeah. So this is not the actual income tax liability because we have been carrying the losses, income tax losses, roughly 8,000 crore. So whatever that profit, taxable profit is going, it is netted against that. So there is no actual income tax liability. It is simply the reversal of the DTA because when you are writing off out of the disallowed provision, you have to write off. So a small portion has come in the form of DTA reversal. So actual income tax liability is nil.
So for full year, what could be your tax liability tax rate?
If you see the actual income tax liability for this year would be zero because of the carrying forward losses.
And next year, sir, would that be normal or that you still have some benefit which is still left for the next year?
It will continue in next year.
I think it is to continue for another 2 years, sir, because carry forward loss is around 8,000 to 5,000 crore carry forward loss is there.
Okay.
So another 2 years tax liability will be zero.
Okay. Understood. And last question, sir, our loan to deposit ratio, right, is around 75-76%. Is there any, is there any informal guidelines from RBI to, to keep LDR within a certain threshold, or you think that is only, I mean, right now you are 73-75 range, but is there any guideline from RBI to keep a tab on the LDR ratio across banks?
There is no guidelines. We have not received any guidelines.
Okay. Understood, sir. Yeah, that is all from my side, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Niharika from Anand Rathi. Please go ahead.
My question is already answered. I don't remove myself from this.
Thank you, madam.
Thank you. The next question is from the line of Ashok Ajmera from Ajcon Global. Please go ahead.
Thank you very much for giving me this opportunity. Of course, I am there in the queue for a very, very long time. Sir, compliments to you for yet another good set of numbers to the entire team of Bank of Maharashtra. And I start with your award slide. You have been receiving several awards, Best Public Sector Bank Award, National MSME Award, Technology Award, Best Nationalized Bank in Agriculture, Retail Bank. So, compliments to the entire team, sir. So, sir, I got some broad, macro questions and some observation and why to seek your comment. that, sir, our growth in terms of you take it business or advances has been, I think, over the period has been slowed down. If you don't compare the corresponding year last year, but if you look at only 9 months of this year and only 1 quarter is left now. So when we were expecting the total business of this bank, crossing almost, the landmark of this 5 lakh crore, I think we are lagging behind a lot on that. Even credit growth in the entire 9 months is only 7.7% and just 3% in the last quarter. Of course, you have achieved good results, good net profit, operating profit, good NIM. This is one that what is your plan to continue to grow at the pace at which you are growing over last 1.5 to 2.5 years, which is keeping Bank of Maharashtra stand alone amongst the entire banking fraternity. So this is one. Second one is our CASA also, which used to be 55-56%, is sliding, from March 53.38% to 50.71% to now 50.19%. So there also, what is our strategy? I mean, are we going to keep some lesser targets of the CASA also? So these are my first question. These are the broad kind of observations, if I can get the answer of that.
Yes, what you have observed is correct. Earlier, bank was growing at the level of 24-25%. Mainly, one was that one of the reason was the low base was one of the reason the growth rate was very high. And second point is that where the sectoral growth. If you see that now the base has come to almost 2 lakh crore and slightly base is increased. So it may be difficult for the banks to at the level of 24-25% growth rate, and even if it is growing, the quality credit has to be considered. Second point is the pricing. So when the growth rate is coming, we are giving more bottom line than the top line as far as growth is concerned. So if you see the current quarter also, our RAM sector, last quarter our RAM sector was 58% and the corporate sector was almost 42%. Within 1 quarter, we have changed the strategy to provide that 62% RAM and balance 38% corporate sector. So 3 to 4% corporate sector we have reduced mainly because of the pricing. But our Mr. Pandeyji has told that correctly why we have not gone for AAA rated accounts. Because when it is coming for pricing AAA rated and corporate loans, the pricing is very sensitive when the deposit rates are increasing. Bulk deposit rates are increasing at the level of 7.5% to 7.80 level. With the present pricing of the deposit with the AAA rated with the lowest cost, nothing will contribute to the bottom line of the bank. So the board also is already advised that instead of going for rates, of course, it is required secondary, but the growth rate of advances we will continue to be around the 18 to 20%. That is possible because we have already sold some of the IBPCs in the market. It is there that will come back for the fourth quarter, and the deposit will grow at the 13 to 14% growth rate. That is number one. And regarding CASA, you are well aware that when the market interest rate is increasing, that is the industry practice that all the industrial constituents, the CASA rate has come to 3 to 4% reduction as observed. So the same thing is happened in case of Bank of Maharashtra also, but we could able to sustain at the level of 50%. That we will try to continue with the 50% level. So for that 50 to 51% CASA level, one of the reasons is that we have not grown much in high-cost bulk deposits. So when the bulk deposit is increasing, it will impact the bottom line. So our strategy is to keep the bottom line intact and the profitability margin, NIM, you can see that last quarter most of the banks are affecting the NIM and NII growth. We could able to increase the NIM by 5 to 6 basis points. So at least even if in future we may not be able to increase too much, but we have to be in the level of 3.8 to 3.4% range. We have to continue with the NIM. That is the strategy adopted by the board. I think My answer is clear?
Yes, sir. Yes, sir. Definitely, sir. My second question is on the new initiative on the information technology, the slide you have given, and also the digital footprint of the bank. I would just like to know, real business-wise, like if you look at the entire delivery of the business, whether the credit or collections or credit card and this thing, how much actually has become operational? And in terms of some value numbers, some figures, that where do we stand today on the digital front, sir?
Mr. Pandey will briefly explain the digital initiative. As usual, we used to do that. Pandey.
Yeah. Actually, this related to the digital products and STPs. See, we will tell you that it is not only business. It is something very directly to business and something very indirectly to business. So what we are doing in our bank is all the digital initiatives are actually having the three pillars. One is the direct business, which are STP, like now we have done STP in the Mudra, we have done PM Sunidhi, PAPL. So almost around 15 to 17 STPs we have launched. So one is in the business. Second, which we have done is in the operation side. On the, I would say like video KYC, which is also on the business, both on asset and liability. The second is on the operation side. And the third is on the services side. So like nomination which we have done, which is totally STP. Now even the third party we have done with the 5 products in the health insurance, non-life insurance and life insurance. So basically what we are doing is that whenever digital initiatives we talk about in the 3 areas. One is the business, second is the operations, and third is the compliance side. So like the robotic process automation. So as of now, we have already implemented 27, which is live in Bank of Maharashtra, and another 10 which we are going to make live in another 10 days. So around 35, 36 will be live in this, and we aspire to cross 50 by 15th of March. So what we mean to say on a direct business impact, yes, we have launched very recently PAPL on a very risk mitigation basis, on the POC basis as well. So within 10 days, we could do almost, I think, 10 crore of a business. Within the POC level, I am saying, not on the public level. The second one is, certainly you know, which is also on the talk, that on the asset quality side. So what we observed when PM Sunidhi we launched, which is totally on the real good algorithm and back testing with the other parameters. Our SMA book on the vis-a-vis comparison is very less. So this is the second outcome of that, and where the people are not involved. In the video KYC, we have crossed almost 125 to 150 accounts per day. So I think, and the quality, the average balance is very good. So what I just wanted to give you a color is that the business is coming, we are actually monitoring, and now the things are implemented. So in another down the line 6 months, you will see, and our digital business zone, which is created for only digital journeys, is having the internal aspiration of around 3,000 to 4,000 crore in a year.
Thank you. The next question is from the line of Gaurav Sharma from HSBC. Please go ahead.
Hello, am I audible?
Yes.
Thank you for giving a chance. Just a small question on fee-based income. So, we are just observing a declining fee-based income sequentially by 10%. So, just wanted to understand the reason on this, whether you have taken some cautious call or you have received some directives from a regulator to go slow on insurance or mutual fund-based income. Because I think in insurance, recently the EOM guidelines have revised and many of the insurers have said that they have increased the commission for the partners. So just wanted to understand the reason for this decline, sir.
Declining fee-based income.
Declining in the fee-based income is the 3 aspects was there. One is regarding fee income connected with advances. So one area where during the quarter we have reduced the corporate advances by 3% of the total advances, and thereby slight impact is happened regarding processing charges, processing fees, all these things. And some of the sanctions we have given already there, that is yet to happen, that will happen during the current quarter. So this current quarter, whatever shortage is there, will come next quarter. Second point is that regarding profit on sale of investments, that is the one area where slightly has come down because of the benchmark rates are constant and we have not much profit on sale is not happened. Third one is our prudential return of accounts recovery. So that also there is a scope is there. So that some of the one or two accounts are there that is in the final stage and thereby the fee-based income will improve. There is no such regulatory guideline regarding commission or like that. Nothing is come to us. So that fee-based income is a point-to-point basis. Now it is 6 to 7% growth is there. So at least double-digit growth we are expecting in the next quarter.
Understood, sir. And sir, on this, revising the commission.
You're sounding a little muffled. I request you to please use the handset while you're speaking, sir.
Am I clear now?
Yes.
Yes.
Please go ahead.
Yeah. Sir, on this revision of expense of management guidelines by insurance, so have you seen increase in your commission cost from the insurance companies?
What exactly? Commission on insurance.
Yeah. See, the commission on insurance is actually increasing because of the two costs, because there is earlier there was some cap sort of things and the bank has also now taken, as you would have seen the earlier press release. So one more we have taken in life, one more we have taken in non-life, and one in the health sector. So I think the business is increasing, and secondly, as you mature in the life insurance business, so if persistency is good in our bank, which is good, so persistency, the renewal commission which accrues to you as well as the new commission, first year premium, I would say. So I think both put together. And not only this, the bank is also doing various other tie-ups and other things. So on the third party, I would say the posture and the color is good.
Understood, sir. Those are my questions, sir. Thank you so much.
Thank you. We have the next question from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Yeah, I'm audible, sir.
Yes.
Sir, I just wanted to understand on your credit cost. I mean, you did mention that we are providing majority of the slippage during the quarter in that particular quarter itself. But I think in the past we did spoke about maybe credit cost of normalized credit cost of 1% plus minus somewhere 10 basis point, whereas current credit cost is much higher than that. So how do we see the credit cost going forward?
See, credit cost, we want to keep it up to 1% only. If you see the additional provisions which we are doing, that is why the credit cost is going up. Otherwise, it is below 1% only. That we are keeping as a cushion as and when required.
Okay. So going forward, we expect credit cost to be around 1% rate.
Yes.
Okay. And that factors into this the policy of, I mean, providing majority of in the provision bucket, the one that would have slipped during the quarter.
That if you see that net NPA is 0.22, almost zero. So that slippage you have to provide almost 100% if you want to keep ratio that and net NPA within that band. So going forward, that with our credit monitoring and slippage will come down, and recovery. Some of the recovery will take care of some of the slippage. So even we provide 100% of that slippage, credit cost will further come down.
Okay. But we do intend to, I mean, provide about 95 to 100% of whatever.
Yes. If you want to maintain ratio between 0.20 to 0.25, almost you have to provide everything.
Okay. Fair enough. And in terms of ROA, how do we see that? I mean, currently this quarter ROA of 1.55%, is that sustainable? And going forward, what sort of ROA range we might be looking at?
Yes, we are expecting that it could be around the 1.50 level now.
1.5%. In
Yes.
FY25 as well? I mean, next year?
Yes.
Okay. Fair enough. I think those are my two questions. That's it from my side. All the very best to you. Thank you so much.
Thank you.
Thank you. The next question is from the line of M.B. Mahesh from Kotak Securities. Please go ahead.
Just three questions. On slide number 19, with respect to cost of deposits, if you could just kind of tell us when this ratio would probably peak at current levels of interest rates?
I think the market expects that this interest rates peak, it will may continue for up to this year and but by second quarter of next year, I think it starts declining. So the same level of cost of deposits or slightly it may increase by 5 to 10 basis points next 1 or 2 quarters, and then chances of that it may come down.
So you're saying at the next quarter we can see a print of around 4.5%, is it?
Yes, another 5 to 10 basis points cost of deposit may go up quarterly basis.
Okay. And sir, what have you done on the changes with respect to the NBFC guidelines? Risk-weighted assets for NBFCs and unsecured loans. What have you done to your borrowers? How have you approached it?
Pricing part we have taken care because risk-adjusted capital-based pricing we have done, and in case of NBFCs, the pricing is passed on to NBFCs, and one or two NBFCs could not able to take up, so that we have not sanctioned that. So the pricing we have passed on to them.
Sorry, if I were to go to slide 20, currently your yields are at about 9.01 on the yield on advances side. Where do you see this kind of going after making these adjustments?
So that will come around the 9.10 level, quarterly basis.
Okay.
Yes.
And sir, on the second question with respect to the what is the impact on account of the recent guidelines on the CET1 side?
Regarding increase in risk weights of NBFCs as well as personal loans?
Yeah.
Yes, it was around the 46 basis points.
46 basis points. Okay. My final question, there has been some conversation in the media that the government has been asking you to step up recovery on the stickier corporate loans which has been there from the last cycle. Do you see any kind of strong visibility of that happening through? Do you see some any more recovery pending on that previous NPL cycle, or are we largely done with it?
Yes. See, this now large corporates, more or less, as far as our bank is concerned, are mostly very less remain. But 12 accounts are now poised in NARCL. They are large accounts, so of 1,600 crore. So we expect that some sale to NARCL will acquire those in the current quarter. So that reduction will happen in large corporate.
Okay. Perfect. Done. Thanks a lot.
Thank you. The next question is from the line of Omkar from Vasuki India Fund. Please go ahead.
Hello.
Yes.
So last 2 weeks back, we saw that we reduced the interest rate on home loans and auto loans by around 15 basis points. While other banks have been, increasing their MCLR in last few months. So, some light can you throw on this?
Yes, last week we have reduced, that is only for a specific bucket of CIBIL score of above 800 and above. So the aim of the bank is to increase. At present we have almost 10% under this bucket, a CIBIL score of 800 and above. So our aim is to increase under this bucket to 10 to 20% if possible. So that it was without risk-free assets we have to create under this housing loan portfolio. That is the purpose that.
Thank you, sir. That's all.
Yes.
Thank you. The next question is from the line of Sushil Choksi from Indus Equity Advisors. Please go ahead.
Congratulations on a very stable result and a good guidance. So what's your view on the outlook on Bank of Maharashtra and banking in view of the current deposit scramble which is happening, the CD ratio, there's talk about RBI monitoring banks where CD ratios are high, and what's your outlook on the treasury market?
Sir, as far as CD ratio is concerned, we have not received any guidance from RBI at what level we have to maintain. And going forward, we look to maintain it around 76 to 78%. And resources also will be mobilized. As far as CASA is concerned, we were told in the beginning that when interest rates rise, there is a tendency for fixed deposits to grow and CASA percentages to come down.
I think we have stabilized around 50%. We'll continue to have that level going forward.
And where do you see CASA coming from? Existing catchment or some new initiatives?
No, we have opened around 200 new branches. That also is a source of CASA. Then we have SNA accounts, CNA accounts, we have government deposits, we have high net worth individuals. There is steady growth from all the sources of CASA.
Okay. And your outlook on treasury?
Yeah. Treasury, that if you see the treasury, the yield has improved. So earlier the yield has gone down below 6%. Now we are hovering around 6.50 to 5.3, and that increasing trend will continue. You can expect that further that increase in yield in the March quarter. And
any focus on where 10-year would be at March end?
My view is that it will hover around between 7.10 to 7.25.
So in view of that, how are you seeing the credit market and your treasury performing?
We will continue to see the opportunity in lending market, because as our ED sir told, we want to keep our CD02, we are comfortable at 78%. So since that yield on treasury on the comparatively on lower side, and we are having SLR securities, so you may see some switch over from investment to lending in order to have a better yield.
You are not expecting major treasury profits in the current quarter as well as in 24?
You know, the treasury profit, it will depend on the market. So once the opportunity comes, definitely we will launch the trading profit. We will try to keep trade-off between the yield as well as trading profit. But as I told that since the treasury is not having yield as compared to lending, and there is excess investment there, that excess we'll try to switch over to lending in order to have a better NIM.
Yeah. Go ahead.
In order to have a better NIM.
Rajesh sir, one question to you. Bank has done exceedingly well in your tenure and your management team. What is one thing which you would like to do in this bank in 24?
24, I think we further our immediate aim is to cross the 5 lakh crore business, that which will happen during this 24. Second thing is high level of digitization, that is already more than 1,000 crore. Capex is already budget is already given. So and BCG we have already appointed a consultancy is already there in the bank for the past 6 months, and most of the area where digitization is happening, end-to-end and STP is already done. By 24, I think this will be fully digitized bank. That is the expectation.
And to achieve all the goals, digital expenditure, all that is possible, what have we done towards human resource and transformation of the bank? Entire top level and the middle level and...
Resource as of now, 13,400. And this year we have opened, and every year we used to open more than 200 branches. And we are recruiting almost 1,500 to 1,600 employees per year. Our officers as well as clerical cadre, we are recruiting that. That will sufficient to take care. So human resource also we are doing well, and the recruitment process under scale 2, scale 3 level or lateral recruitments we are doing. So human HR area is fully taken care, and as regards trainings also we are giving. There is a good number of trainings, and all the chief manager and above, employees are this year has been trained in top 3 IIM institute or top 3 management institute, and that kind of trainings we are bringing down up to scale 1 level. That also parallelly we are doing that. So HR area we will improve further, and the productivity, you know that this is one of the productivity area bank is the number one in case of total business per employee is concerned. So we will continue to do that.
So the bank is future ready for digital and future ready with human resource, both on an integration basis. That is what I should conclude?
Yes.
Thank you, sir, and all the best for 24.
Thank you.
Thank you. Ladies and gentlemen, we will take that as a last question. I would now like to hand the conference over to Shri A.S. Rajiv for closing comments. Over to you, sir.
Thank you so much for having given an opportunity to share with you, all of you, and please continue to support the bank. And I am sure that this bank is having a bright future like this quarter and next quarter. Again, this kind of results will continue. I assure you that. Thank you.
Thank you. On behalf of Bank of Maharashtra Limited, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.